Guys, how's everybody doing? Thanks for being here. Sorry I wasn't on at 2:30. I fell asleep and didn't even wake up till after the market closed. It's just been boring. I've been super sleepy the last couple of days. I mean, it's because I stay up too late. Gosh darn it, Jax. I forgot to feed Jax. Hang on. All right, Jax. I gave you a handful of food. Go chow on that for a little bit while we're talking. While I'm talking to my friends. All right. Anyway, sorry about sleeping through the afternoon live, but really we didn't have any earnings trades. And I get up and I find the one trade I have on this week was a big winner, just by coincidence. But I did bad last week. I had two losing earnings trades last week. But anyway, this was a big winner and it makes up for what I lost last week. So we'll take a look at that in a second. You guys could probably figure out what it was. My standard is I like liquid tech stocks for earnings. And there weren't many tech stocks this time around. Adobe, I don't know, you call Adobe that liquid, but anyway, Oracle is definitely a liquid tech stock, and I guess they hit earnings. Great job, Oracle. And of course, that kind of trade's made perfect for my three-leg risk reversal because they made a 2 standard deviation move to the upside. So let's look and see what the market did. It looked like the whole market recovered. VIX closed. I mean, not on the highs of the day, but close. That's not good. Or did VIX close? A little bit less high than VIX. How about VIX futures? Futures rule everything. They were steady, but they've been steady since Tuesday. I guess they had an expiration and they probably had a contract track switch. I don't think they really jumped that high. I think that was just a contract switch. But in any event, you can see VIX has been comfortably trading at 19.5 lately. That's been in the time frame that I follow, that I trade, 30-minute time frame. 21, 22 lately has been too high, and 18, 19's been too low, and 18's been too low, and 20's been about the middle. It's 1972. We'll just call it 20. All right, it's close to 20. All right. Well, let's see what the SPY did. Oh, look at that. Nvidia was up. That's good. SPY's up a quarter point. Heck yeah. SPY 30-minute chart. It's hard to tell. It's kind of a mess in here. Went up this morning after the number and then just kind of ground higher. All right. Qs weren't up as much as the SPY, but they're still up quite a bit. Bitcoin is not as bullish as either of these two. 10-year is no longer up at 4.5. It's coming down, so that's good. All right, well, that's really good to see. Let's take a look at some other stuff. As far as the model goes, when I got up for my nap, I looked at this, and that's how I knew the market had bounced, because bench, which is just the SPY, said 40. Now, this is behind by 15 or 20 minutes. The SPY didn't finish up 40 basis points. It finished up, it looks like. We were just looking at it. Let's put it back on here. Oh, this is a daily chart. But anyway, it did finish up 40 basis points. Look at that. Maybe that was the closing numbers, 40 basis points. Anyway, we will take that. So that's what, that's be a good benchmark to expect your own account to be up as much as the SPY. I mean, especially if you have a growth account, that's kind of the ultimate growthy comparison. Anyway, all right, so back to the SPY. Okay. So, but the model portfolio beat it. It was up about half a point, mainly on the heels of GDXY. We haven't looked at a GDX chart. I'm going to swerve back over to this way, and let's look at the chart of GDX. GDXY, of course, is the high yield ETF based on GDX, based on the ETF GDX, which is the VanEck Gold Miners ETF. I mean, what's not to like about that? So that's GDX, but GDXY is the asset we're talking about that we have allocated to the model portfolio. There it is. So, and the reason it looks like it's sloping down right there, that's not adjusted for dividends. I bet if you adjusted for dividends, this thing's sloping. This thing looks great. Went sideways. I mean, went sideways for 6 months, but then when it broke out, it's been marvelous, hasn't it? All right. Well, anyway, back to the model. Look at ULTY coming through for me today, making 10 basis points. Now, it didn't make as much as the SPY, but oh well. TLTW, what a freaking dog. Let's look at TLT real quick, which is what that one's based on. That high yield fund is based on. The underlying is TLT, which is iShares 20-year bond ETF. I did it more for the exposure to that part of the economy, not and less so for the tactical, as I was bullish on TLT. But if they do start lowering rates, right, TLT should rally, I think. I mean, that's part of the deal, but who knows if that'll even happen. Who knows? So look back here. This is a blast to the past. This is extra max points. If anyone can tell me, Jackson, what's the matter? Are you all right? This is extra max points. If anyone can tell me what these red boxes in this note is, see the max convexity no-go zone. Always branding. Always thinking about branding, right? You got to try to be thinking about earning money. That's why this station is so successful. But anyway, who remembers what those were for? Who remembers what those were for? Put it in the comments and put it in the comments. Anyway, TLT, but look at this but on a serious thing. That was a long time ago that we were jacking with those things. Was my point. It seems like it was about a year ago, as a matter of fact. In fact, it was exactly a year ago when I found out this thing was getting shut down, but because I was in New York, but it didn't end up getting shut down for a few months, and I couldn't tell anybody because it wasn't public yet. I asked, I said, can I tell people? No. Anyway, it didn't end up costing anyone any money or anything. This fund just is anyway, tell me the symbols that goes with it. I don't think any current Mac fans were Max fans back then. I don't think even Tom might remember back then. But I don't think I remember any of you guys other than Tom from a year ago. But I could be wrong. All right, but anyway, my point is, look at TLT. It's gone straight nowhere in a year. What a freaking dog! And then before that, it had gone down for a year, and that's because when rates went up in 2022. And now it's gone straight sideways. So, all right. But it's still, I think that's still good for a diversified agent. I don't know, but I'm always looking for some way to make that better, to make this allocation better. I also don't like that I don't have a very big percentage of LFGY. You can go to my website and you can check this stuff out for yourself live anytime during the day or night. You can see what all the funds are doing. And you can see, like, my allocation. TLTW, I only have 5%. I only have 6% of LFGY. I want to have more LFGY. I'm going to start publishing a target allocation maybe, and then try to keep it on the target allocation and maybe adjust it once a month or something, more like a hedge fund would do. Or like a business would do. It's like whatever, or a company. It doesn't have to be a hedge fund. It could be a bank. It could be a company. It could be anything. But this diversification's been working out really nice for me, especially this little 14% YQQ. because it doesn't seem to cost me too much on up days. I still outperform today, and I outperform lots of up days and lots of sideways days and lots of down days. So I love this. I love this 15% Y triple Q. That's not going to change, but I probably need to add some to the LFGY. Anyway, all right. Let's see what else we can get ourselves in the middle of. That's enough about me. Let's look at. Okay, I'm trying to. I fell asleep before I got anything done on my Alti sheet, but I love this. If I wish I could make this bigger, I need to start working on this. If I could learn how to interpret this every day, this is everything, every position they have. And you could see which ones are making the money and which ones are costing money. We talked about this a little bit this morning. This Oklo call is costing the money. Lots of these things that are up so much is because, remember, when you do covered calls, like that's what ULTY is doing, or they're doing callers, which is partly a covered call. When you do that trade, you still have a stock. And if the stock goes way up, that's great. Yeah, you might be capped out. And so you might have a minus in this side of the column, but you're going to have a huge plus in this side of the column. Like, in other words, look at the Oklo's market value is the highest market value of any of these on here. It's as much as Tesla almost. It's okay. So it's the second highest market value of any on here. Now Tesla isn't carrying the huge day. You know, they just got one of their options in the money anyway. Like I say, I'm fascinated with this, but I just don't know if it's. I'd love to turn this into something more, but for now, I've been trying to get it. I don't know why it can't do this. See this right here where it says execution log. At least I'm sharing the screen today. See right down here it says Vistra Corporation 2.79%, Vertiv Holdings 1.9%, Upstart. This is what I told it. I said, just give me a list of the stocks and not the options. But they, I don't know. Anyway, I just need them to, but I think I got it, but I got them to output it in the execution log. Somehow I can't figure out how to I need to get it on the darn spreadsheet. But if we could get that and just chart that, then I'll start doing that just like I used to, but automatically for GPTY, ULTY, LFGY, CHPY, and whatever other ones come out that we're interested in. And we'll publish that to the web so people can check that without having to worry about if I woke up from my nap to do the live stream or whatever. I'm trying to make the numbers where they're more accessible. I'll publish them in Discord too or somewhere, but we're you know, you can, if you're a fellow ULTY fan, but I haven't had a live stream or I forget to talk about it in the live stream because I get sidetracked talking about a dozen other things, you can just call it up. I'm trying to make my station more of a source for data or whatever. You don't know, independent of me. I mean, because you know me. I mean, yesterday I got on a rant about politics, but I just woken up from my nap and I saw some bad stuff in Discord. So I'm saying I can get sidetracked, but the AI won't get sidetracked. I want it to always be there. But anyway, so be looking for those reports in the future once I figure it out. But I wouldn't mind I really wouldn't mind getting this report on all of those funds every day, just as a quick way to look at the option positions. I mean, you can watch Rod's show. He doesn't cover all team stuff, but you can watch Rod's show and he'll evaluate the option positions in Misty and those kind of things. But I think it'd be fun for us to start doing it here, or you guys to be able to do it independent of me. Like I say, we'll start publishing this stuff live, especially if you guys have find any value in it. All right, so that's it. Model portfolio. I was just trying to show I'm trying to make a new Altiverse. Here's the old Altiverse, just for fun. We'll look at the old stuff, but I'm hoping by tomorrow this will be new stuff. That right there that's the Chippyverse. You know, and that's where you could see what the fund was down. But I haven't updated these stocks in a couple of weeks, and lots of the stocks have changed. Heck, Alti had stuff that I hadn't even heard about in there. So, if I could just get AI to keep this freaking thing updated. Anyway, we'll see. We'll see. It's a work in progress. All right, let's look at but I really do like the index buffer report. And this is easy. There's no updating in this. That's why this one always works. It's one of the few things we can almost always look at is the index buffer report. So I'll probably start publishing this live somewhere too. But I want to make this better first. This could be a lot better. Maybe it's not there. All right, well, let's see what else we can look at. I know I have tickers. I promised Ethan I would look at a few tickers. Hey, Mark, how you doing? There's 5 of you guys here. Was I sharing the screen? Yeah, I was, right? Oh, big fan. I thought it said not a big fan of your channel. Anyway, that'd be fine. I'd rather somebody tell me. But and I get those comments occasionally, but usually it's not on a live stream. Usually somebody does it on a, in a comment. They'll say, man, I'm not a big fan of your channel. You're too in love with these things. I think you're, or something like that. Sometimes it'll be constructive. And anyway, but no, that's cool. That's cool. But big fan of the channel. Well, anyway, thank you, Div Dad. I haven't seen you on here before, so I'm going to make some assumptions about you. So Div Dad. So yeah, obviously I'm picturing you as married with a family, or maybe, divorced, but you have a family, obviously, Dad. In 83, so you're one of two things. You're either 2 years older than me, 83, meaning maybe you graduated in 83. I graduated in 85, and a big part of people's identity is the year they graduate. But that could have been the year you were born also. And I have a lot of friends currently that were born in, I have 2 best friends who were born in 79 and 81 or something. They're millennials. So anyway, so I'm really thinking you're probably a millennial with kids. Anyway, but thanks for being here. Thanks for being here. I love trying to make assumptions about people. Now, Norman here, he is a famous or a notorious or a fan of the Warren Buffett system, and he's even been to Omaha. Do you go to Omaha every year, Warren? I mean, Norman, I'm just curious. Since I'm knowing you, which has only been a year, you've been both years. I knew you last year, and I know you this year. We went both years, I remember. All right. Yeah, everyone's young bucks compared to Mark and myself. There's a few others on here that are my age. Paulty had a good year. Well, I was just trying to guess your demographics, Div Dad. But yeah, you're probably I got you covered. All right. So 42 is a good time. Yeah, that's what you are. You're a millennial because you're 40, because you'd be the right age where you're starting to be obsessed about investing. And that's how I was too when I've been that way my whole life, but I was particularly got that way when I was 40 and 45 and 50. And as I got a little bit more serious. So Mark, you're 10 years ahead of me, just to get everyone. I'm 58 actually. So you're 9 years ahead of me. I'm actually going to be 59 in October. So I'm closer to 59 than trying to think what I want to do for my 60th birthday. I'm going to have a big Mac celebration here in Austin. If anyone wants to come around, I know my family's going to be here, but then I don't drink. So it'll be, we'll go to the lake or something and have dinner or something like that. But anyway, all right, let's look at some stuff. So I just want to say hi to everybody. And yeah, you guys talk amongst yourself. Norman, ask Norman about the copycat BR, whatever fund, the Berkshire funds. Let's look at some other stuff. And I don't see that Ethan's here, but I owe Ethan a few tickers. But I know everyone's not into me just talking about tickers, but I think one or two a day can be fun too. Or it's fun for me. I love to look at stuff. That's how I find out about stuff. I don't even know about stuff because I spend all my day looking at AI and messing with jacks, playing my guitar. It's all about how much fun you have, right? I mean, I think I always put having fun first. I'm joking. I mean, business comes first. But all right, guys. So I'm really proud of this on the AI thing. Look at this. I mean, I would never dreamed I could tell you this. How much premium all the funds earned yesterday. Or actually, it's right here. Daily net premium report. And I'm going to run it today at 5. I almost thought about maybe running it and then doing the live stream. Maybe I should run this at the end of the day and come on and then be able to talk about that day's trades on that day instead of tomorrow morning. But I don't really think you guys are tuning in to hear that much about this stuff, but I would like to be able to add this capability. I mean, there's Alti sold 1.6 million yesterday, and we can look it up. It's because it's right here. I just like to be able to talk about this stuff. What's it called? It's called raw data, or it's not called raw data. It's called process data. Let's just look in on ULTY real quick and see how some of their trades. Did they have any Oracle? I bet they did. They had Oklo. They've had Oracle in there before. Did they not get? Yeah, they got a piece of that. Look, yesterday they bought a call. They bought 500 of those babies, the 177.5s. How do you think that freaking thing's working out? Heck yeah, right? Heck yeah. Okay, so now we're going to have to get into option strat. We're going to weave over into option strat land. Let's just look at I have an Oracle trade in there. Let's see how that 177.50 is doing. I could show you guys a way to look at that. Just pretend like you bought it. I think just go to it, 177.50, and switch the expiration to here. All right, 177.50. Trying to think. You can save trade, and then view save trades. You can hover, you can right click on, there you go. You can right click on it, and this graph shows you, I guess, but it only goes back all day. So it's good for day traders. It shows you if you would have entered or where you would have exited, how much that option was worth at different points during the day. But anyway, the thing is, the big move happened after hours, so it's going to have it's going to be up. It's going to be worth. This was only up 11. Let's see what it's going to be worth in the morning if someone had it. So we can see what ULTY they paid for it. Premium collection, and they bought 500 of them for $6. So anyway, it's trading around 200. So 177.50 minus 200 is what, 22.50. So it's going to be a lot. It doesn't run out of it's going to be a lot. The 3-leg. Let me show you the 3-leg trade. And I have something similar to this on in real life. The page for I had 2 losers last week. Last week I had the one that went to max loss. And it was because it was a liquid tech stock. You know how I am. I like options, earnings trades, or just options generally on liquid tech stocks. Doesn't matter what it is, just because. And I just like tech stocks because they seem to move a bunch. They're in the news and stuff. But it doesn't always have to be. Lululemon certainly wasn't a tech stock. I've done all of that. Anyway, so here's Oracle. So I lost 1,000 last week on. I forget which one it was. I've suppressed the memory. Then I had one that was a small loser, but I just remember. But this will be nice. So just to recap what this is, all I did was just forget about the call. This is because this isn't smart. You aren't supposed to do that, but you are supposed to do this: selling a put, and you can, or selling a naked put would even be a better, smarter thing to do. But selling a put spread in front of earnings, one thing, because IV's high, you can move the puts way behind. The market was trading around 175 or something, right? The puts were way out of the money, so you can, that's the smart thing to do, and that's really all I'm trying to do. And that's a $365 credit, and that would have been well enough right there. And there's lots of people that trade options and just sell an out of the money put and out of the money call in front of earnings. That's a great thing to do too. Sell a strangle. But yeah, that would have been great, $365. But it's not good enough for me. I hate selling premium because I just hated never, being along for the upside. But then when you include this option, you do them in the right order or the right ratio. It's then you have a little bit of money out here on the big, the big beyond. I'm always talking beyond a standard deviation. And it could also, and it's a little bit further than beyond. It's the market maker expected move, and then another maybe strike, and then that's the the one standard deviation beyond both of those, but that's the way I picked the one. The 190 was probably right here at the one standard deviation. So now that it's got two standard deviations, I'm quoting Scramble from who's a good option trader from TikTok. When I got on Discord or TikTok from Discord, when I got on Discord, as soon as I woke up, Scramble said it made a standard deviation move. But anyway, but that's what it's all about. That's, I had one earlier in the year too. I forget who it was on, but I don't know overall. I miss a lot, and I don't know overall if it's that huge an advantage, but I like it. I love this kind of play. Anyway, all right, guys. And it made up for last week. What's this FTAI? I know we were talking about that this morning. I really started talking about Long Island iced tea and never really did. It's and I don't even know it had earnings. I was just started looking at it because it's in ULTY. I mean, is anyone just copy trading ULTY? You could use ULTY and just run poor man's covered calls, or you could do what I do. I mean, it's or you could do the will. You could do, you could start doing just regular covered calls. But anyway, what I'm saying is I think that's a good universe of stocks to start with, is the stocks that Jay's using in ULTY and LFGY and GPTY, because those are ones that lend themselves, I think, to options. So anyway, I wanted to show how a 3-leg risk reversal would work on that FTAI. I don't know if they had earnings or not. I should just start calling this synthetic star, or I guess it's just like a call option, because your losses, it's just like a call option. It's like doing a call option for a credit, but the profit and loss is like a call option because it's like stock on the upside, but on the downside, it's limited to a certain point. So anyway, but it has, I love the convexity. You can see this as the slope gets steeper. That's the convexity is the change in slope of the delta. All right. Well, anyway, that's FTAI. And it wasn't particularly liquid. Well, I think we were just looking at this. What's this? So the bearish Adobe hit. What did the bullish Adobe miss? I didn't do Adobe. And it was because it was too expensive. I didn't want to. Anyway, I couldn't. I had to pick one or the other. I already had Oracle. It was DocuSign that I missed last week, and the cost me money. Remember, and it was DocuSign was the same as Oracle. It was my liquid tech company. All I'm looking for is a liquid tech company. That's all. So I played it through the weekend, and it actually went. It was a 3-leg, of course. I took it off for a profit to $400, recentered, put it on again, but then that one lost $1,000. So even with the 400 profit, it's still, yeah. And then I had another one that was $150 looser or something. Anyway, it was a tough week last week. Hedge for the rest of the month. I thought this one was going to come in handy, but this market refuses to go down. If the market goes up too much, sometimes it makes these where they're worthless, and we need to do a new one because it's too far away. But if you want to look at this real quick, this hedge for the rest of the month, super simple. It's just a put spread, but it's where you're buying a put spread. So you're buying puts instead of selling puts. So you're bearish instead of bullish. And sell puts, of course, you're bullish. Anyway, but you're buying a put spread. So the sold leg, which is 492, is where you're aiming for. And it also happens to be at the second standard deviation. Is actually 495. It's a little bit beyond it, but then there's a third standard deviation right down here somewhere. But anyway, but this is trying to protect against a 2 standard deviation move. Won't help you in a 1 standard deviation move, and that's fine. And the trade-off is it's only $61 a contract. So if that. The reason and I have this one on too, and the reason, or something just like this, and the reason is if, or let's say overnight Trump tweets something and the tariff wars are back on or something, this trade will be worth a bunch in the morning, and it'll probably be worth, $500 or $600. But that other trade that isn't closed yet might go back to just being worth the initial credit because it'll knock the market down. So I like to play both sides. Anyway, so that's the hedge. Those are my trades this week. It's just the Q puts and Oracle. I don't think I did anything else. All right. Well, anyway, hopefully you guys' trades have been going well too. Yeah, Oracle was it was a good choice for me. So we'll live to hear this. So Matt, you were a pro musician for 7 years. Too little reward for too much work. Really, what was your instrument? That's but no, that's awesome. That is awesome. I play a lot. I play a lot myself. Here's my guitar, but I have to keep. Lots of times though, if you guys see me in it and I was supposed to do a video and I haven't done it, it's because I'm sitting here. Sometimes I'll get sidetracked. I'll pick up the guitar and I'll start playing and get sidetracked. But the guitar is really good as a stress reliever for me, or almost more like a fidget spinner. I don't like plug it in or play songs, but I'm always playing scales and arpeggios and it keeps my I have kind of it helps me focus on stuff. Anyway, you played 140 gigs in 7 years. I've always been a wannabe professional, but no one did ever hire me, so I was never able to get anyone to hire me. But other than that, I'm a bedroom producer. You play guitar, but also play keyboards. Oh, and pedal steel. Yeah, I've been learning how to play country lately. My whole life I've played guitar, but I've just tried to play like standard, Pink Floyd and standard stuff that's in your standard minor mellow keys. I got really good at just playing in any type of minor scale, Pink Floyd stuff. But then I played for 30 years and I couldn't play a country tune. Whenever someone was at a jam and there's a 1-4-5 with the A7, D7, and C7, I was lost and it made me furious. And it's made me furious for like 20 years. But then when I got sober and I came down to Austin, I decided I was going to learn how to do it. So I got on YouTube channels of some country players and I finally learned how to play over freaking major chords. It's been the greatest thing ever. Now I can sound country, but then I can also still sound in the Pink Floyd, the stoner rock. All I did was learn how to play stoner rock when I was growing up. So I knew one key. I knew that I knew Dorian and I knew Aeolian. I knew the minor. You get it. You're a professional. Anyway, but I know Mixolydian now, and it's the greatest thing ever. I mean, I love Mixolydian. Someday I'll play for you guys. Anyway, all right. Well, but yeah, I'm a Mixolydian guy. In fact, I go a week and I don't even play minor. But for 40 years, all I did was play minor stuff. All right, I'm trying to see if we have everything else covered. All right. I used to have a lot of nice guitars, but I was irresponsible, and it makes me sad to think about the ones I've had and lost. But eventually I had to get a cheap guitar because it had no pawn value, and it's been the only one I was able to keep, and I still have it. It's a Squire, but I love this thing. Not a great guitar, but I mean the Strats and Martins that I've had and Taylors. Anyway. All right, so what's going on here? Okay, we haven't looked at the max factor yet, but let's look at some high yield technical analysis to see how the funds are doing. That actually should be fun. So, and I just made this better yesterday. And if you guys want, I'll show you a little bit. Okay, so this morning I was talking about the Holy Grail factor, and I even called it the Holy Grail factor. We can even sort by the Holy Grail factor. Watch this. And you guys can do this at home too. I'm going to give you a formula. Excuse me. I'm going to give you a formula and a tip. So the Holy Grail factor, this is the best factor. And for some reason it doesn't seem to be working. So we're calling Z to A. I don't see why I put this one that's 60. Maybe let's see. A to Z. Okay. That's reverse. Sort column, Z to A. Okay, well, that's weird. It should sort this JCOM. All right, well, forget about that for now. I think the whole sheet may be messed up if it won't sort that. What happened to WTPI, Wisdom Tree Premium Income? It's saying not available. Why did they even put that in there? I mean, that's not a high yield. I mean, there's nothing wrong with that. What's one that I don't have in here that I need in here? I think I have NVW. There's PLTW. Let's just if I have it, we'll put something else. PLTW. And PLTW may be too new, and I may have to, see, it doesn't have this thing that's called a risk factor, and I have to manually set the risk for it. So because it's not old enough for the, I think it needs a year's worth of data for the statistic I use, but it's PLTW. It's going to be a 1.3. How does that sound? I'm pretty good at doing this. I know what it should be. But then when it gets a year old, I'll put what it actually is. But it'll be somewhere over 1.5, 1. It'll be something like that. All right. So now let's. Oh, look, PLTW went straight to the top of the max factor. Well, maybe I didn't make the risk factor high enough. Maybe the risk factor is more like 2. In any event, it's still at the top. Well, then that's excellent. Let's see why that is. So one thing is it's the trailing 12-month dividend is $7 on a $45 investment. That's insane. A factors 4, B factors 15, meaning it's 4% above the 20-day moving average and 15% above the 50-day moving average. All right. And then there's some other stuff here, and you add it all up together. Even when you factor in the risk, it's the best fund. I wonder if it was as risky as ULTY. ULTY is about a 2.5 or 3 on risk. This isn't as risky as that, I don't think. But I'm just saying, if we put that in there for a risk factor, we'd knock it out of first place. I'm just kind of curious. No. Okay. But in any event, okay. So here's our list today: PLTW, MSFY. That surprises a lot of people. The reason it's kind of high on there is because its risk factor is lower, and you have to divide its risk. The risk factor has to factor into to the thing. In other words, if you had, my theory is, if asset A is up 20%, but has the same risk as the SPY, or you can invest in asset B that's also up 20%, but has 3 times the risk as a SPY. I get that's a bad example, but people go just naturally, just like people do as little work as possible to get the money they need. Generally, you take as little risk as possible in the market. That's my theory anyway. Let me switch this risk factor back to 1. We'll make it 1.5. All right. Anyway, MSFY, then NFLP. That's good to see. Look at old NFLP. Cost $40. It's paid $7. On a trailing 12-month basis. I'm trying. Then this one is 12 months old. I need another factor that said, or another thing that says inception date, so I don't have to guess. But look at all this. Look at all this momentum. NFLP 0.34 and 0.7, meaning it's above both its moving averages. It's not as far above as PLTW, But anyway. But you also have to factor in how much it moves in a day and how risky it is. Anyway, this Holy Grail. So this Holy Grail thing, what I was trying to show you guys is really all we need to do is just use the Holy Grail factor and forget about all of these. And you guys can do this yourself. The Holy Grail factor is just total return. And all I figured out how to do, and it was hard, and I'm not going to give you the formula, but I'm saying it because it was tough, but all that is the total return, but for the quarter. But you can do that yourself. In other words, there's websites that have it. Just look at, the total return for the quarter. That's another way. If you just want what's hot now, that works also. So if we did it that way, number 1 would be PLTW. I guess PLTW was on here. Gosh darn it. All right, maybe another one. Maybe I'll put NVW on here. All right, NVW, and oh, it used the same risk factors PLTW, and that's about right. 1.5 is fine. NVW, and we have NVW on there twice too. What's another one? Somebody give me another one. Anyway, there's tons of them, but I want those leveraged ones. It's TSYY maybe, but I already have TSYY on here. There's YSpy. What's the other one that's not YSpy, but that's Y, but the Q version of YSpy? I tried to put that in here the other day, and I would be more interested in following that one than YSpy. It's a Granite Shares fund. Let's just look it up. We'll swerve over to the Granite Shares lane. Come on, Granite Shares. They're called the Yield Boost. I was thinking it was like YQYY or there's YSpy. Oh, it's not. Oh, no, it is out T. I kept using YQYY, and then I was going to YQYY and YQQY. And all right. Well, TQQ. Okay, but then that's the Qs. All right. And it's leverage Qs. Okay, TQ. Let's go slap that one in there. This is something I'd be interested in. Yeah, we have two NVW, so T, Q, Q, Y. All right, and it hasn't been out that long, but it's paid $2.70 on $19. And it's been out about a quarter of the year, so make that, multiply that by 4, and what does that give you? $10 on. So it looks like it's paying about at the rate of 50%. Which would be in the same ballpark that Defiance paid. Remember, I said Defiance would be the highest one ever, but because they pay consistently. Their Q-based fund, triple QI, pays 50, 60, 70%. And their SPY-based fund or SPX-based fund pays. So maybe I'm wrong. Maybe this will actually be higher, but I just couldn't imagine anything paying more yield. I think I did add unleveraged, and this is leveraged, but I mean, that was a monster as far as yield goes. It's on here too. We can look at them. But anyway, TQQI. All right. Well, let's see how it's doing. Now, I got to give it a risk factor. It's a 1.5. Yeah. I guess it just got a lot of these aren't out a year yet. Oh, I'd assume the risk factor from the one before. That may be a little high on that one because it's index based. It will be more like 1.2. All right. But we'll see what it is when it really comes out. I have to curate these numbers, make them they're hand curated, right? So number 1, MSFY, number 2, NFLP, number 3, PLTW, number 4, Maxi, number 5, MSFO, number 6, NVW. Then look at old Maggie got on here. Now that's good to see. Maggie costs $55. It's only paid at $1.78 so far. Let's swerve over into the Maggie lane. I like the idea of Maggie. Maggie's the same thing as YMAX because it's roughly the same thing. We'll see. I don't know if Round Hill uses monthly or weeklies. And Yilmax is just a fund of their funds, which use weeklies. Is this just a fund of their funds? Probably it is. Let's look at it. Computer's not cooperating. Well, anyway, I like the idea of this fund. I'd like to find out some more about it, see what's in it. Look at all these assets under management. It's about 11 million. So all it does is it has mags. It looks like it holds mags, and mags. Oh, and then it just sells a call on mags. Well, that's an easy way to do it, of course. I didn't know mags had liquid enough options. So they're trading stocks in their own, or trading options in their own product. They buy mags for the underlying, and then they sell options on mags. So anyway, that's pretty slick. Pretty slick. We'll see how they do. I mean, they've obviously been doing well so far. Now let's see. They have not even been around a quarter of a year. Really, they need to be around a quarter before I need to put them on there. It won't mess it up too much, though. It's not going to change. I mean, they're just doing well, and there's no two ways about it. Let's look at YMAG for comparison purposes. Let's even maybe pull them up next to each other. All right, well, let's just do it on dividend. What should we call it? Let's see. I was talking to a friend today in Discord about the Yield Max funds, and he was saying, "Do you still like them?" I said, "Yeah." I said, "Especially for a young guy." He's like, "What do you mean?" And I'm like, "Because they get extra upside." And I know he happens to be young. You know, when you're young, you really should limit your use of high yields because of what they do to your future. But and a lot of young people do like the round hill ones. The round hills are some of the most aggressive as far as catching upside. There's other ones too. But anyway, the round hills are doing well at catching upside and paying a huge premium. There's other ones that catch a ton of upside and don't pay a big dividend. But anyway, all right. So let's go. Let's just look here let's just go this year, see what we have. Okay. Well, YMAG is spanking Maggie. Look at that. Heck yeah. Heck yeah. That's awesome. Now let's look at income, premium, with dividends, whatever you want to call it. YMAG paid $1.20. Maggie paid $1.80. But look at the price. Look at the price difference. YMAG paid the same price. I mean, this makes a really strong case for YMAG. Don't you guys think? I don't have YMAG in my own personal portfolio because I would rather have YMAX, and I've had YMAX in there before, and I still do have a little bit, just because it has more constituents. But YMAX is the same thing. Look at this, pays about the same, pays a little bit less, but the stock is 1/3 of the price, and it pays 80% of the same dividend or whatever. So anyway, those Yield Max funds are monsters for yield. You know, and I wonder if they did it the other way around. A bunch of the main gripe on those funds is that they don't get as much. They don't get enough NAV. People think they're Ponzi schemes and stuff. And that is that is a concern. But anyway, but these ones that get but you can alleviate part of that by using the ones that basically are like growth funds. And round hills are some good examples. The most classic growthy type fund, though, are these ones like Bali or GPIQ and GPIX, these ones that are only doing half overwrites and still paying 12%. And I'm thinking of Bali and GPIQ. I think actually pays more like 8%, but they're exposed to a lot of upside. And then I know the Global X isn't the, most exciting, but but if you're just looking for income, you want plenty of upside, they have a NASDAQ product where they only sell 50%. Yeah, it's at the money. Okay. But 50% is unencumbered by options. So that's called QYLG. So that would be a great one for a young guy also, because I was just trying to explain, not that there's anything wrong with these funds, but one of the qualities of them is, or features or whatever, is that you leave upside on the table. So if you're doing that as a young guy and you have too many of these funds, I'd hate to see a young guy leave too much upside on the table. So that's why I'm always saying use as little of these as possible. And we try to lean towards, that's why I'm always trying to point people towards the funds with more upside. Okay. But that except for round hill. And I haven't been the hugest proponent of round hill, but most of the guys are my age and I think are more into yield. And if you're more into yield, even if you're into yield, round hill is a great product. Round hill is a good product, no matter how you look at it. I mean, it's a good product. So here's the other great thing. You don't have to choose both of them. I think that YieldMax has a lot of great products and make a lot of great cases. You just saw the YieldMax product, YMAX, spank the round hill product. There's no one saying that you can't have some YieldMax products and some round hill products. Round hill products, particularly XDTE and QDTE, seem to be, some of the best products. So I think that'd be a nice portfolio right there, is a little QDT from round hill, or maybe some XDTE, and then some YMAG. If they're all the same, the S&P, the NASDAQ, especially capital weighted, are basically So, but that, you can have both, but I really think that made a great case for the YieldMax one that paid so much better. And the YieldMax product that we were looking at right here, MAGI against YMAG. Well, let's do MAGI against YMAG to make it the same. It even has the same stocks. But yeah, this is a bad look. This is a bad look for round hill right there. But then I'll show you, this is a bad look for, then we'll put over here XDT or QDTE, and then we'll look at QDTY, which is close, but QDT is beating it. So that's round hill's best fund, I think. QDT, XDT, and YieldMax has a version of it, and it trades right with it. It trades right with it, but a little bit behind. But I think that's a good look for round hill. But the other one was not such a good look. I was actually kind of shocked at this. Really, the dividends was shocking. To pay, it's not the same dividend. I said the same, but $1.30 to $1.80. It's 50 cents difference on dollars. It's different by 20 or 30 cents, but it pays 20 or 30% less dividend. But the price of the stock is you only have 1/3 the initial investment in the stock. So that's a monster dividend. Let's just add it up. Let's just, how many times 13 going to 100? How many times 12 going to 100? Like 8. So we'll multiply that by 8. So that's $10. Okay. So $10 on something that initially cost you 14, pretty dang good, right? Now this one's going to be good too. So this is $1.80 times 8. So that's like 12, 13 or something on something that cost you $52 initially. So this pays you about 30%. And this pays you 60 or something, 70. I mean, at the rate it's going. We'll see. I mean, it won't always go to this rate. It's just because it's only come in, look at this. It's only been out since April 23rd. So the dividends will slow down. The volatility's been kind of high. Dividends will probably slow down this summer, or if the market keeps rallying, the dividends will dry up. 9 of you guys here. I appreciate you guys being here. So you like the PLTW. So what is it? It pays 1.5%, but you haven't looked at the erosion. Well, my theory on the erosion, it's more like It's more a function of what the parent asset does. The ones that erode a bunch are the ones that have the really bad parent assets. Another, you know what I'm saying? So in other words, PLTY, or not PLTY, PLTW has been, hang on a second. There's so many of these, or PLTR is what I'm trying to say, the parent asset. Palantir has been great lately, right? I mean, it did go down last week on the Elon news. I never did understand that. It went down kind of in sympathy with Elon. Maybe I thought all the tech bros were on the outs, or, you know, but just for a day, and it's recovered to make new highs. So anyway, yeah, that's incredible right there. So all of these things have depletion, and the depletion is the amount of the dividend, but you don't notice the depletion as much anyway in ones where the parent asset is going up all the time. You know, but if you have one of these that's Moderna, then it's going to seem like it's 100% depletion. And basically it will be, because it pays the dividend. The dividend is the depletion. So Moderna still pays a dividend. And if it pays a dividend and the parent asset just drops all month and keeps dropping and drops the next month, you're going to get the dividend, but you're also going to be, you know, wearing that loss. So it's not really erosion or whatever. It's just the Moderna is going down. That, you know, it's the parent asset's fault. In other words, you blame everything on your parents, right? My parents screwed me up. Look at this breakaway. I think they call that a breakaway gap, where it makes a huge gap on the daily chart. And look, it never even looks back. That's amazing. It tried to do the same thing here, but it did kind of go back through that one. But that's an amazing stock. NVIDIA, Palantir, you know, they're like the next generation of what Apple was last generation. And Apple's was the next generation of, I don't know, Dell and IBM and some of the big companies that were prior. But that's a beautiful freaking chart, isn't it? That is a beautiful chart. All right, guys. Well, I appreciate you being here. I can't believe there's still 10 of you guys here. I think I'm out of stuff to talk about. I think we've done the buffer report, and I'll just look through the spreadsheets really fast. Premium collection. So this is just how much all the funds collect. We talked about a few trades on there. So we looked at that. High yield technical analysis. We talked about that a bunch. That's how we got off on the Palantir, and we even put some new funds in there. We look at the worst funds. Watch, the worst funds will be the ones that have the worst parent asset. Babo, TSYY, leveraged Tesla hasn't been great lately. Babo hasn't been great. That's a real estate investment trust. Fiat is an inverse fund. Kind of surprises me that Apley's doing this bad. But anyway, that happens. I mean, so we checked that out. This is my new Alti spreadsheet that I'm working on. This is going to turn into new Altiverse. I'm going to try to have this where it shows the allocation and then maybe even the daily change, then just chart the daily change like we've been doing forever. But anyway, we've looked at that, talked about that. There's the model portfolio. Something about YSPY. Why is YSPY really fun? Oh, yeah, YSPY is 5%. I took a starter position in that. I forgot about that just because it's out of order. I usually have it sorted where it goes. I need to work on the sorting of it, but yeah. So that's nice to have. I mean, I don't think it's done that great for me yet, but it will. I have faith in YSPY. But it's weird. We're just talking about Granite shares. So, all right. But anyway, we checked that out. I'm looking back here on some of these other profiles. This is the old LFGY and Alti-Grid and stuff. Boy, that plane crash in India was terrible, wasn't it? They said the 787 wouldn't crash. Anyway, I've also heard bad stuff about the 787. But certainly the 777 has a good safety record, I think. Anyway, those big Boeing wide bodies are not supposed to do that. They are not supposed to do that. Anyway, what did Boeing do today? I mean, how bad was it for Boeing? Is Boeing not? What's Boeing? It's Boeing's B, right? No, that's Boeing. What's Boeing? BA, of course, BA. What a great ticker. Yeah, you don't want your ticker to be BO. It'd be a stinky company. That company would stink. All right, well, all they did was revert to mean. Look, they just went right back to where they had two-way trading. And there's people that were buying down here, probably smart money, banks and stuff, and that I guess still had orders waiting or whatever because it dropped it there, but then it stabilized. If you're a bear and you want to play for the next level drop, you could aim for 180. If it gets worse, that's probably the next place that it might try to go. Or if it got really ugly, you might want to look at 160. All right, guys. Well, I think we covered everything. I just was kind of going back through some stuff. I appreciate you guys for being here. Yeah, down about 2%. So we have some guys in here that are my age because Norman is 65. I'm going to be 60 pretty soon. Tom, I think, is in his mid 60s. And Mark, of course. And then there's also, I really like this guy. We used to disagree on politics all the time in Discord, but he's a really nice guy. I forget his name, but anyway, he was in his 60s or 70s. All right, guys, thanks for being here. I appreciate you all for being here, and you have a great afternoon. Anything that I forgot, just put it in Discord. We'll talk about it later. I'll try to do it better tomorrow. All right, guys, see you later.